Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. Every week, I'm growing my portfolio's cash flow and gradually replacing my salary to hit an early retirement in 4 years at 40 years old. My portfolio already pays me an extra 65.7K per year. It's almost as if it's a second job on its own, which is pretty awesome. This is all enabled by me using margin against my growing assets to pay all my bills instead of using my paycheck to pay bills first, then investing the rest. I literally invest every single penny of income that comes in, whether it's my paycheck, cashback, YouTube income, everything, any income that I make, whatever it is, just gets invested. Today, we'll check in on how all that's going by going over the week 56 portfolio update since I started this strategy at the end of May last year. I'll go into all the details of my performance this week, breaking down how I outperformed the S&P 500 this week by over 4.5 times, did my 2.4% total return gain. I'll also check in with my margin health, all my dividends received, and portfolio thoughts. All that said, as usual, you'll get radical transparency on this channel, whether the market is up or down. You'll see my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, give a like and subscribe. Just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results for everyone to see. Make sure you have a good read of this whole disclaimer. As far as the weekly flow chart, you can check it here. If you're new to the channel, feel free to pause. But if you want a in-depth breakdown of this, check out the video at the top right where I just kind of talk through this whole thing in a deep dive of it. So yeah, let's just get started. If we pop over to Robinhood to kind of see my full live portfolio here, you can see all my positions, all my buying power and my margin. So ended the week at 238,000. Pretty awesome as far as the net value. I think that might be an all-time high right now. So on Thursday, since Friday was off because of Juneteenth, I was up 8.5K or 3.73%, which is awesome. And then after hours came in at $933 positive or 0.4%. On the week, I was up 2.4%, like I mentioned, or 5.5K. And if we compare that to VU over here, you can kind of see that VU was up 0.52% on the week. So yeah, that's how I almost 4.5x that's performance this week, which is awesome. And this is all in total return, right? This is with dividends included. On the month, I'm up 18.1K or 8.26%. On the 3 months, I'm up 74.5K or 45.64%, which is amazing. Year to date, I'm up 54.8K or 29.94%. If we go to all, since I transferred over in July last year, I'm up 61.9K or 35.19%. So doing pretty amazing, all said and done. Even if we compare that to SPY in the 1 year, SPY was up 24.8% and up 35.19% with total return. Pretty amazing overall. If we switch over to the spreadsheet to kind of just like deep dive and like look at how that all breaks down. So if we add up all my assets together, my gross portfolio value is sitting at 422.4K. So amazing. Yeah, all the assets added up. That's pretty much an all-time high, I think, right now. Firmly above 400,000 now, which is nice. Using 185.4K of margin, and then my net value here is 236.9K. So this is without the after hours stuff that's included in Robinhood, right? So this is just as of close Thursday. And if we pop over to both the total return columns here and the unrealized gains, so mostly in the green in total returns here. So just some of the usual suspects that are still red. ORR still in the red here, but slowly climbing up. ILT just slightly in the red, like about a little bit of the dip this week. YMAX is back in the green here, which is nice. ULTY just slightly in the red, 0.97% in total return. So yeah, if we get a nice green week next week, might actually flip to the green here. KGLD got hit hard this week with Fed announcing that they're maintaining rates and there might potentially be hikes later in the year. So that kind of like really crashed the gold's price. And BTCI, just BTC in general, has been hammered a lot. So this is just down quite a bit still. So yeah, but we'll keep an eye on this in case there's a rebound. As far as the total profit, if we go down here, so that includes any realized gains, dividends, and all that against the margin value of the portfolio, I'm up 118.4K in total return or 49.97%. So pretty amazing. And you'll notice that there's a little bit of a big difference here this week. And just because I was realizing that I was deducting the ROC from these prices, previously, but I had forgotten to take that off because the cost basis from Robinhood actually updated to factor in the ROC. So I didn't need to factor that in anymore. So this actually was higher than it was last week, which is actually what it was supposed to be. So that was kind of nice. Just a little oversight I had there with the ROC estimate. And then on the unrealized gain side, still pretty in the green. Again, some of the usual stuff is still in the red there, but overall still firmly in the green here. I'm up 29.6K or 12.5%. So that includes like the realized gains and losses, right? Like, so the minus 12.4K of losses that I have there, plus any of the unrealized, and then yeah, all that on the margin value. So overall on both sides of the coin, like, yeah, sitting pretty nicely in total return and on the unrealized gain side, which is nice. If we check in how this 422.4K is split between growth and high yield income. So on the growth side, I'm sitting at 203.8K or 48% of the portfolio roughly. And on the high yield income side, sitting at 218.6K or 51% of the portfolio as an allocation. So a nice split there. And as I've mentioned, like high yield income is just going to get higher and higher just because I'm investing like 90% of my paycheck into it now, right? And only 10% of my paycheck still goes to growth. If we check in on my margin health, so gross value, margin used, net portfolio value, all that's the same. If we multiply the gross portfolio value by the blended margin maintenance, you get your margin maintenance value here. So 105.6K. So this is what my portfolio would have to fall to basically trigger a margin call, right? So if we minus that out to the net portfolio value, you get your margin buffer here. So 131.3K. So nice and healthy there. So if you divide that against your net portfolio value, that's a 55.44% buffer. So that's like pretty much close to what you'd see here in Robinhood, right? But like I kind of say week in, every week, I like checking the margin buffer against the gross portfolio value, right? So ultimately, like this is your buffer number, right? So if you lose that amount against your gross portfolio value, that's actually a 31.10% drop, right? So if you take this, divide this by that, right? And really, because of the margin amplification, that's actually the equivalent of a 55.44% drop on your net portfolio value, right? So I think that's a key thing to understand there and to really understand your gross margin buffer, because ultimately this is all the assets that are in the market, right? And that's what's kind of swinging the portfolio a lot more depending on your margin. So really important to kind of keep this in mind. So ideally, I want to keep growing this, right? Like now it's at 30%, could be a lot better. I want to ideally grow this to 40, 50%, just so that like if there is like some crazy 40% flash crash, right? And say I'm at like a 50% buffer, like I won't be margin called, right? So that's the goal. So 30% crashes can still happen, right? Like, I mean, in 2022 for tech, it happened over a year, down 32%, right? On QQQ and in COVID, obviously in March 2020, like everything dropped 30% in a month. So definitely close, right? Like with 30%, but I'm not too nervous about it. Like, I think like if it were to happen, I think there would be time to react, right? Like for it to drop 30% in a day, it's something like crazy has to happen. Like typically it'll happen over a few months, over a month top, like at most. So always keeping an eye on this, right? And my equity sitting at 56.1%. So nice and healthy and over 50% there and still growing. My buying power sitting at 86.9K. So you can get that by doing your margin total minus your margin used. And then, so this is like 86.9K that I could technically invest in stocks if I wanted to, right? Or if you take half that, you can actually take that out in cash, and that's 43.4K of cash available for withdrawal technically. So you can kind of go either way. But again, I'm just kind of growing this buffer more and more just so that like, yeah, I keep my margin buffer high and well away from a margin call, right? And that's why really I kind of check in on my margin health every week and with you guys, right? Just to kind of stress the importance and just kind of checking it, right? Because yeah, margin, as I say in the disclaimers, right? It's dangerous, it's risky. So it's like important to keep tabs on it and properly check your stuff, right? That's where the margin health is this week. And really like my margin balance at the end of the day, 185.4K, that's not free. Really what's happening is that I'm paying a 4.5% interest rate on it. I love this interest rate from Robinhood for margin. Like I wish my mortgage was this low, right? My mortgage is at 5.95%. So really what I'm doing is paying $691 roughly of interest per month. But what's nice is that my portfolio is generating a lot of income, right? So yearly, like I said, it's generated 65.7K. Monthly, it's generating roughly $5,475. Weekly, it's generating $1,263, and every day it's generating $180. So all that amounts to roughly a 30.05% distribution yield. So I get this 30% by basically dividing it by only what the high yield income assets are in the portfolio, right? So that's the 218.6K. So I like knowing exactly like, you know, when I'm putting my money in, how much money it's returning roughly. But if you go off the full taxable value of the portfolio, right? So that's actually more like a 16.15% yield if you take this amount against the 422.4K, right? But yeah, as far as the high yield income side, it's generating a nice amount there. And really that makes for a positive spread of $4,783 a month, which is awesome. So paying $691 a month, carry this margin balance, right? But I'm bringing in $5,475 of income. So that's a really nice 4.7K positive spread here. So a good deal, if you ask me, for how much margin I'm carrying, right? And I mean, what's nice too is that like, in case of emergency, right? Like I could potentially just sell like a portion of my growth and then actually just pay down my margin balance fully, and then everything and my income, I'd fully own it. But yeah, I'd rather still kind of just carry it and kind of have this hybrid growth and high yield income strategy, right? To kind of get best of both worlds in that sense. And yeah, that's the numbers there. If we check in on my salaries with the dividends included, right? So my base salary is 175K. If we factor in dividends, my salary is closer to like 240.7K. With my 7% annual bonus, my salary would be closer to 187.2K. But with dividends, that's closer to 252.9K. So pretty awesome. There is like the retirement stuff here, but I'm not kind of getting all my retirement benefits right now from work. So I'm going to mention these right now. So really just going to focus on these two numbers. So pretty awesome to see overall. Yeah, the hourly salary of $31.47 if we go off just the high yield stuff in my portfolio, which is pretty awesome. So a lot higher than Washington's minimum wage here at $17 an hour. If we check in on Snowball Analytics to kind of see how things break down, right? So I break down the categories a little bit more granularly just to kind of see how each slice of the portfolio is doing, right? So I have my ultra yielders here. So anything that's more in the 20 to 30% plus yield range. So even that, surprisingly, with the nice run up we've had over the last few months, this is positive at 19.8K or 17.4%. A lot of this is kind of carried by Chippy, and GIAX is doing amazing as well so far, and Blocks has been holding up nicely, but everything else kind of being dragged down by YMAX, ULTY, and Chippy here. And you'll notice again that these are a little bit different than what you see in the sheet, right? Just because I actually have the updated cost basis here from Robinhood that actually factors in the ROC, but for some reason, Snowball doesn't pull that in. And then you have my high yield anchors here. So anything that's in the 10 to 20% range. So all this is kind of really buoyed by XPAY here, up 32%. Yeah, TSPY, TDAQ, all the indices were holding up really nicely. So that's up 13.6K or 13.51%. My hedges here, finally in the green here, up 2.6K or 6%. So yeah, or kind of dragging things down here. KGLD, like I said, got hit this week, but yeah, bought a little bit of that dip, which is nice. You can kind of really see, yeah. So yeah, just kind of been buying the dip here as it's dipped, and hope for a recovery after that. And yeah, IALT, relatively fresh position here, so expected to be in the red here, but bought a little bit of that dip, which is nice. And yeah, that's for the hedges. And again, like the goal with this is to really just kind of have this amount stay relatively stable. So like 10% of the portfolio that I don't want swinging as much, and kind of hoping to achieve that buy gold, which is uncorrelated to the market, though, you know, sometimes it does move with the market, but generally not. And then or IALT and CLSE are really long shorts to kind of really reduce the beta and volatility of this 10% of the portfolio. So, and then here, this is all my growth and dividend growth anchor ETFs. So VU, VGT, SPMO, SCHD, QQQM. DRAM here is probably the most volatile in here, right? Because it's more sector based and very specific with the RAM stuff. And just kind of like a little play on the memory shortage that we're experiencing that should last for the next couple of years, really. But this is up like crazy. And yeah, that's how everything is splitting up there. If we check in on the overall growth, you can kind of see that we outperformed the S&P. Not going to go like, not worry about the numbers here too much, because as I've mentioned in the other weeks, this is like not quite the same from what we were seeing in Robinhood, right? But you can kind of just see the overall trend, like of how I was beating the S&P this week. So like, yeah, just outperformed it on some of those green days. When the Fed kind of announced they're kind of more dovish or hawkish. I always forget which one is which. But yeah, they kind of hinted that they might be raising rates later in the year. That kind of like tanked the market here. So went down with the S&P and actually roughly matched it. But then as things kind of shot back up the day after with like the news of the peace deal that was going to happen, then it's not happening anymore. It keeps flip-flopping. Like I kind of said there, like who knows anymore, right? The whole situation is so volatile. There's so many players that like so many things can go wrong at any given time. So yeah, I'm always kind of taking any news of deals with a grain of salt. If anything, I'm just happy to buy the dips when they happen because of all the news and back and forths with all that. Overall, you can kind of see that beat the S&P there. And then if we check year to date, doing pretty amazing against it, right? On the 1 month, beating it as well over, way over 8 times. On the 3 months, more than doubling it. On the 6 months, more than almost triple. Year to date, doing amazing. If we check in on the heat map, and again, how you can kind of access this is through here. So normally this is the view you'll get, but you can switch to the heat map here, which I love seeing. And yeah, just nice to see what performed during the week, right? So you can kind of see that Chippy and SPMO were up big. There's a lot of momentum there. These really outperformed QQQ and VGT, right? SCHD down a lot, I'm assuming on just kind of like the Fed's stance on potentially raising rates later this year. XPAY outperformed VU, which is awesome to see. ORR had a rare green week, so that's been nice. CLSE down a bit on the Fed news. MLPI down a lot on kind of like the peace plan potentially going through, right? So the price of oil tanks, so this tanks accordingly. Bitcoin down quite a bit this week as well, but blocks held up nicely, probably because of its more semiconductor exposure through NVIDIA and things like that in it. Yeah, ULTY and YMAX actually beat out VU, which is kind of awesome to see. And TDAQ ended up underperforming QQQM quite a bit. QQQI, one of the rare weeks that it actually outperformed TDAQ. And yeah, just had half the performance of QQQM here. TSPY outperformed VU, which is awesome to see. SPY well underperformed here, unfortunately. Though, it looks like SPY is missing its dividend here, actually. So a couple of these that like, the dividends didn't come in. Actually, let's just kind of mark these as came in. So I definitely received all of these. So let's just check. So SPY here, we can kind of see that it slightly outperformed TSPY, but almost matched VU here. KCOP and metals overall just down this week because of just the Fed's announcements this week and stances for rate cuts or rate hikes rather. IALT down a little bit this week, and that's why I bought the dip there. And DRAM up a lot, 18% on kind of the peace plan news. So just a nice view of the week this week. And we check year to date how stuff is holding up. So like you can see that year to date, everything's mostly green, right? Really just ORR trailing, BTCI, gold, IALT a little bit as well. So, but everything else just really in green. Chippy, the big winner here so far, up 61%, which is insane. SPMO up 34%, right? So beating out QQQM and slightly ahead of VGT here. So just awesome to see like how stuff is holding up, right? You can see the TDAQ is kind of closely matching QQQM, which is awesome to see. QQI trailing quite a bit behind there. TSPY against VU, just trailing it there, and SPY trailing quite a bit. So just kind of seeing that, right? Like again, it just makes me think that like, maybe I should just consolidate to kind of TDAQ and TSPY potentially. It's just been handling a lot of the volatility and stuff a lot better as far as kind of capturing the upside, right? So that's how it's all looking year to date. If we pop over to the dividend calendar to see how we're looking, again, this will look a little bit different than what we saw in my sheet here, just because Snowball uses the last payment, then projects that out, right? So it generally tends to skew a lot higher than normal. But what I do for mine is that I average out the last 3 months for the monthlies and the last 4 weeks for the weeklies. So it's a little bit more of a realistic kind of estimate for my monthly income, which I prefer compared to Snowballs here, but kind of nice to get a rough idea, right, of how much you'll be making. So they're saying closer to 70.2K or 5.8K a month. But this week was a massive week for dividends. So had 1.4K come in on Thursday from all my monthlies coming in, had TDAQ payout as well on Wednesday, and then blocks and GIX on weekly on Monday. So really that was over 1.5K of dividends that came in this week, which is awesome. Had $35 come in from blocks at 35%, had $19 of GIX come in at 23%, had $187 of TDAQ come in at 16%, Had BTCI come in at $248 at 27%, Chippy at $487 at 44%, a very small dividend from IALT, $4 at 0.4%, $183 from MLPI at 14%, $118 from QQQI at 13.9%, $35 from SPY at 11.6%, or 11.8, sorry, and $202 from ULTY at 66%, and $119 from YMAX at 48%. So week for dividends this week. Next week is shaping up to be a pretty decent one as well too. Looks like we'll be a little bit above $1,000, which is awesome. Have some of my quarterly dividends coming in, and then just mostly the weeklies other than that. So that'll be nice. But yeah, on the month, we're looking like we'll be just shy under 5.8K this month of dividends, which is awesome. If we check how we're doing kind of year on year, can kind of see that we're really performing year over year, right? So you can kind of really see how like just investing in high yield income over the last year is kind of really boosting that income, right? And just kind of beating itself year over year. And ever since I did my big rebalance in February stuff, I've just been kind of steadily growing, which is awesome to see. So just kind of nice to see there. So definitely going to be outperforming in June. We'll probably be outperforming in July, just not August, I think. So yeah, that's how it's looking. And again, as far as yield on cost, you can see the usual suspects here, ULTY and YMAX have kind of eroded, right? So, and this is why this kind of shows why exactly I'm really focusing on the core here. So any of the 10 to 20% yielders, right? Because they hold their yields a lot better. So even on months where they were down, like you can kind of notice that these were still holding up nicely. They hold up their NAV and their yield a lot better over time. So that's why I'm really focusing on these and to really build up that stable foundation in the portfolio as far as the yield and income. But yeah, you can kind of see how like ULTY got a 66% dividend this week, but with all the capital and how much the price has fallen, my yield on cost is closer to 40%. For YMAX, we got 48% this week, but the yield on cost is closer to 30%. Chippy here, actually its yield just growing with the price going up. That's actually to like a 65% yield, which is crazy. Blocks holding steady at 35%. BTCI has eroded as well with Bitcoin dipping, right? So 27% yield this month, but it's kind of closer to 15% yield with how much capital I have in it. And then you can kind of see how GIX, XPAY, BCAT, KGLD, all these are holding up really nicely. So I'm just going to do that. And that's all the numbers there. As far as portfolio thoughts this week, nothing major this week, honestly. Still mostly thinking through how I might potentially just consolidate my portfolio a little bit more. Yeah, the number of positions have definitely ballooned over time. And there's definitely some redundancies, right, between TDAQ and QQQI, TSPY and SPY. Yeah, for like why I kind of spread my risks across them is just to have different strategies, different companies. But the more I kind of look at them, like I've mentioned for TDAQ and QQQI, for example, like I've just seen like firsthand how like just TDAQ and QI, like these have sat like around the same time in the portfolio, but like TDAQ is just getting a lot more of the upside, even just like on purely on a NAV basis, never mind the dividends, just appreciates a lot better. So yeah, I might maybe do it. Still thinking about it. SPY potentially going into TSPY could be a thing too, potentially. Maybe even BTCI. Maybe I swap BTCI for blocks potentially. Then that could potentially be one. I'll have to think it through. Even on the growth side, I'm kind of looking sometimes like some of these are kind of redundant a little bit, right? So maybe I just kind of focus on like the highest ones. So like, for example, like between VGT and QQQM, right? So there's some differences there as far as the holdings. Like VGT is a lot more concentrated for sure. And purely tech, QQQM is a little bit more widespread and it has like Meta, Amazon, which VGT doesn't have. And like even things like Costco. So that's one that I think about sometimes too, maybe just selling out of QQQM and consolidating to VGT potentially, right? And really just keeping VGT, VU, and SPMO potentially on the pure growth side there. SCHD, I just kind of love having as like a hedge and something that kind of diversifies me away from tech in general. So that one will probably just stay. But yeah, as far as OR, I've been kind of doing it gradually, but like anytime I see tax lots that are in the green, I've been kind of trimming them and adding them to IALT. Like when we check it over here, you can kind of just really see how it's been really impressive. Like it's a fairly new fund, right? It only kind of got listed in December here, but it's just gone up nicely. And you can't even see how it was affected by the Iran conflict, right? Like there's no dip from it. It just kind of kept continuing in its march up, right? So that's been impressive. And then it has like way more diversified in international exposure compared to ORR. ORR is kind of just very overly concentrated in Japan, and I think that's why it's been kind of struggling a little bit more with its international exposure and kind of everything that's going on in Iran and the Strait of Hormuz. So yeah, it just hasn't rallied as much as the others, which has been unfortunate to see. But CLSE working great in that regard. IELT has been working good. So I might just be gradually kind of transferring stuff over to IELT as things get greener. So we'll see how ORR does and recovers or not. But that's where the portfolio's sitting as far as thoughts this week. I'm not going to do any finance video of the week this week. It was just a really busy week with work. I was kind of really jamming away at stuff. So just didn't have as much chance to check out videos as much. So yeah, look for that next week. But as usual, if you want to support the channel, best way to do it is to check out the description on any video. You can kind of see how you can find my Snowball portfolio link, right? You can kind of see all these same numbers that I show every week and poke around yourself. My free Blossom Social profile. If you like the spreadsheet that I use to manually track stuff, you can kind of just grab that for $5 on Gumroad. And if you want to join our private Discord, you can only access that for $3 a month through either the Patreon or YouTube membership, which you can kind of click here. And yeah, I love our little Discord server, love the community. Like, yeah, what's really great is just that you have access to a great community of people, tons of people that are living out of their brokerage, whether through a hybrid method like I'm doing, or through pure growth, or through kind of hybrid and with options. So lots of people doing it. People have been sharing their portfolios, which is awesome to see. So you can kind of peruse there, take some inspiration from people and see how they're doing things. And yeah, lots of great categories to just dive into, like mortgages, even healthcare and retirement, taxes, all that good stuff. I personally post all my trade alerts, kind of see that here. So you get a little bit of a heads up and a little bit more details on what that goes into compared to what you might see on Snowball or on Blossom Social. So great little community to join if you're interested. That's that. If you appreciate the transparency, definitely give a like and subscribe and hit the bell notification if you want to be notified about future videos. And I'll catch you in the next one. Peace.